Ms. Legalista here. Thank you for joining. I want to talk about student loans for a minute. And yes, I have had those. Yes, I have paid them off, and I'm very thankful for that. It took me a while because I had 3 degrees, so it can take you a while to pay that off. But I want to talk about Navient and Sally Mae. If you were one of these people who had a student loan, then maybe you had it through Sally Mae back in the day. Then it sort of changed its name and became something else. And it was always sort of this piece, this sort of arm of the government that provided loan servicing, send your bills out, here's who you got to pay, that sort of thing. And for me, I guess part of it had to do with the fact that I was young. I didn't have any of my loans being serviced through them. I had another company that actually was a very good company. I had no problems working with them whatsoever. When I needed to consolidate at the very end, when I was done with my law degree, worked fine. I was able to set up for automatic withdrawals, dropped my interest rate down to 1.5 because I had had the account for so long, and because it was being automatically debited from my account, it was always in good standing. So it was really easy for me to get a very low rate once I consolidated. You can't really beat 1.5, right? I think after that, it's like zero. Well, I had 1.5. So that was pretty good. But what happened here with Navient is unbelievable. I remember having a few potential or prospective clients reach out to me about what was going on. I just was not familiar with it. But you go back and you look at this long history that it has had in terms of not just how it treated students, but also service members. And of course, it has had to pay a lot of money in fines. I want to open this up and go to this news room press release that the Consumer Financial Protection Bureau put out. And I want to go through some of what went on here because a lot of times I talk about corporate entities. It's easy for us to talk about credit card companies and financial institutions and banks and some of the things that they are doing wrong. Thinking about Wells Fargo and what was the other one? I can't even think of the other one now that, they're opening up accounts in people's names without their permission, that sort of stuff, because they're trying to set goals and all of that. Okay, they're trying to make money in the end, is what it's about. So we tend to focus on them. We tend to focus on fraudsters and scammers who are out here engaging in pig butchering and romance scams and online scams and cryptocurrency scams and deed theft and mortgage fraud. And so we know a lot about that. But when we have some of these entities sometimes that seem to be somewhat related to the government, we don't tend to probably think of them as being institutions where there might be a lot of fraud going on or unscrupulous activities. I'm trying to really say that word. So let me go ahead and open this up because I do want to talk a little bit about this because I don't want us to have our blinders on when it comes to some of these government related entities too. We need to look at, research, and vet them just like we do all of these other parties that I'm always talking about. So I think the world is open here in terms of who we need to be questioning when we decide that we're going to engage in some sort of financial transaction with them and not just think that the bank or the scammers or the fraudsters are the bad guys all the time. But sometimes there are these government related entities that can have some practices and policies in place that harm us just the same. And so I just want us to be really mindful about that. And I want to take this video to talk about what went on in this case. And I want to do it by breaking down this press release on their website because we need to know about all this stuff. It says, look, so yeah, they were just like, hey, we're going to ban you from federal student loan servicing and orders the company to pay $120 million for wide-ranging student lending failures. A lot of this had to do with steering them to products that would hurt the students but would cause a financial gain to the institution, or not give them repayment options, tell them about them so that they didn't know that they could make other decisions. But it says here the order would put an end to Navient's years of abuse of students and taxpayers in the federal student loan program. Now think about it. These are people who were trying to get loans to go to school so that they can have an education and go out and get a job. And these are the parties that you want to take this out on. Sometimes it's unbelievable. It says Washington, D.C. Okay, today the Consumer Financial Protection Bureau filed a proposed order against the student loan servicer Navient for its years of failures and lawbreaking. If entered by the court, the proposed order would permanently ban the company from servicing federal direct loans and would forbid the company from directly servicing or acquiring most loans under the Federal Family Education Loan Program. These bans would largely remove Navient from the market where it, among other legal actions, steered numerous student loan borrowers into costly repayment options. Why do you think they did that, right? Navient also illegally deprived student borrowers of opportunities to enroll in more affordable, income driven repayment plans and forced them to pay much more than they should have. Now, for some of this, you probably know what they're talking about here. A lot of times they'll have these programs that are income based. So you pay a certain amount based on the income that you have, recognizing that when people first graduate, their income is not as high. Later on, it's going to increase and they'll be able to pay more. And so it says, hey, they didn't even steer them in this direction towards some of these programs. Of course not. Navient also illegally deprived I already said that. Under the terms of the order, Navient would have to pay a $20 million penalty. I'm wondering if that's just a drop in the bucket, though. You let me know. And provide $100 million in redress for harmed borrowers. For years, let's see what they're saying here. This is coming from the CFPB director. For years, Navient's top executives profited handsomely by exploiting students and taxpayers by banning the notorious student loan giant from federal student loan servicing and ensuring the wind down of these operations. The CFPB will finally put an end to the years of abuse, the number of families that this has hurt. I applaud the CFPB for obtaining concrete relief for borrowers and deterring similar failures in the future. It says today's action builds on the Biden-Harris administration's work to hold loan servicers accountable and protect borrowers, including more than 1 million borrowers who have received debt relief by fixing past failures to properly track progress toward forgiveness, such as correcting harms from forbearance steering. And then the other thing to think about here is, there was a settlement in place. And so students who were harmed did have an opportunity to apply and see if they could get relief from the settlement. But y'all, I mean, some of what they got back. Now, this. These settlements, a lot of times, unless you're out there fighting on your own, if it's this big settlement with all this money and all these people and it's a class action, you'll be lucky if you get more than $100. But I think in this case, it was a bit more than that. But still, okay. The CFPB's investigation of Navient kicked off a series of efforts by state and federal agencies to examine forbearance steering and other breakdowns in the income-driven repayment program. Those efforts have resulted in more than $50 billion in debt relief for more than 1 million borrowers who were wrongly steered into forbearance. They were steered into maybe some higher programs, as well as those who had payments miscounted. Today's order complements actions already taken by the Department of Education and state attorneys general to provide redress to borrowers harmed by Navient. All right, it says they were headquartered in Virginia, formerly known as Sallie Mae. It's one of those things where, it's sort of you change your name because everyone knows all the bad stuff that you did and you think having a new name is going to clear that up. It really doesn't work that way. That bad reputation just follows you wherever you go. People know how to Google and look you up and see that you're really the same entity. At the time of the CFPB's lawsuit in 2017, Navient was the largest student loan servicer in the United States. It serviced student loans of more than 12 million borrowers, including more than 6 million accounts under its contract with the Department of Education. Altogether, it serviced more than 300 billion in federal and private student loans. During the period covering the CFPB's lawsuit, the company was led by CEO Jack Raimondi. Raimondi orchestrated the launch of Navient out of Sallie Mae. This was going to be this whole new thing they were going to do after Sallie Mae ran into issues. Since the launch of Navient, the company's performance has lagged others in the industry. Last year, Navient's board of directors replaced Raimondi and began to transition the company away from its sordid history. Well, I'm sure that's entirely what they wanted to do, but you got a lot of history to overcome there. The CFPB sued Navient for failing borrowers at every stage of repayment. They said, look, from the cradle to the grave, you guys are just getting this wrong. The lawsuit alleges that Navient steered borrowers who may have qualified for income-driven repayment plans into instead. This practice was cheaper and simpler for Navient, but detrimental to borrowers. By steering struggling borrowers into forbearance where interest continues to accrue and capitalize, Navient's illegal actions led numerous borrowers to pay additional interest charges. So yeah, wrong forbearance plan when they have income-driven repayment plans over here. And it's an individual kind of thing, right? It's not this sort of thing where you can say every single person should have been in this and not that. It's one of those situations where you look at what the circumstances are. How much interest are you paying? How much do you owe? How much longer do you have to pay things off? It really comes down to figuring out what works best for you. Remember, I said, I waited and consolidated all of my loans at the very end when I was done. And because I'd already had a good payment history, I was able to, knock that down to a really good interest rate. Plus, it was being automatically debited from my account. So there were a number of factors that went into how it worked for me, which is the same thing here. But imagine if the party that I was working with never said, hey, well, you qualify for this reduction if you do this, and you qualify for this reduction if you do that. What if you're never told that? It sounds like that was some of what was going on here. Okay, because guess what? They can get more money coming in if they don't put you in these programs that benefit you, but don't necessarily benefit them. It says Navient is a repeat offender. Imagine that, a repeat offender with a long history of regulatory violations. After a referral from the CFPB, in 2014, the Department of Justice and the Federal Deposit Insurance Corporation, FDIC, ordered Navient and its predecessor, Sallie Mae, to pay almost $100 million in illegally overcharging nearly 78 service members. In 2021, the Department of Education ordered Navient to return more than $22 million in overcharges. Imagine that. Like, how would you even know you've been overcharged? In 2022, 39 state attorneys general announced a $1.85 billion settlement. Look at that number. With Navient for originating predatory student loans in addition to its forbearance steering practices. Y'all, it's just too much. It's just too much, right? In 2021, its contract with the Department of Education to service direct loans finally ended. Navient announced in early 2024 that it intended to transfer the servicing of its remaining loans to another servicer, who we hope will be much better at following the rules. The CFPB's order would ensure that Navient can never harm federal student loan borrowers at scale by getting back into the business of directly servicing federal student loans or growing its federal family education loan program loan portfolio. Look, they're saying, no, we don't want you doing this. And then it goes through some of the things that it did. I just want to touch on those. You can see those here. Misleading borrowers about income-driven repayment plans, failing to notify them, botching payment processing, just getting it wrong, harming the credit of disabled borrowers, including severely injured veterans, deceiving borrowers about requirements for cosigner releases, and misleading borrowers about improving credit scores and the consequences of federal student loan rehabilitation. Yes. So you see here the order that they're going for: pay 100 million, redress to consumers, and to pay a $20 million penalty. And of course, you've got some other information down here too. And then they've got the complaint. And I may go through and read the complaint in another video. But again, just to help you understand that I've talked about scammers and fraudsters and what to be on the lookout for. What's going on with some of these banking financial institutions. But sometimes we forget about these, like I said, these government related institutions. Navient came out of Sally Mae. And so you sort of think the government is there to help you. But it depends on how the entity has been set up. What is the relationship? How does it make money? And who benefits when there are profits, and who's harmed when there are losses? Because that impacts how they treat borrowers, how they treat student borrowers, how they treat veterans, service members, disabled persons, how they treat all of those people. So you have to you have to you have to verify, vet, and research any of these parties that you're dealing with now, because you really can't just sort of take them for their word. I hate to say it, but you really can't. You have to look out for yourself. Nobody else is going to value you like you do. All right. So don't forget to give the video a thumbs up. Let me know in the comments if you've been through any of this with Navient, if you have found your way to some peace by paying off your student loans, and if you're done with this and you're just like, hey, I'm just now worried about my children. All right. Don't forget to give the video a thumbs up, and don't forget to subscribe. Peace.